Hello, everyone. It's Sid here from Fundamental Research, and our guest today is Mark Appleby, the CEO of Tartisan Nickel. Tartisan has a high-grade nickel project in Ontario that can potentially supply material for the EV, electric vehicle battery market. Tartisan is one of the very few high-grade nickel projects in North America. They recently completed a PEA, preliminary economic assessment with robust economics. So the agenda for today is I'll kick off the call with our thoughts on nickel, and Mark will take over from there and talk to us about his asset, recent PEA, and upcoming catalysts. For listeners, you can either wait till the end to ask questions. If we have questions during the presentation, feel free to type them in and we'll try to respond to them. Here are some key disclaimers. Please take a moment. Okay, so let's get started. Nickel prices have been on a roller coaster in the past year. Prices are down 20% in the past 2 months and up 22% year over year, and it's currently sitting at $10 a pound. We're expecting prices to be under pressure due to rising rates and slower global GDP growth forecast. As shown here, GDP growth is expected to slow in all of the main regions of the world. This will have a material impact on demand for base metals across the board. Lower demand is expected to move the nickel market to a small surplus this year. This is another reason for the recent decline in nickel prices. That said, we believe the supply market is vulnerable as Russia accounts for 9% of global nickel supply and about 17% of high purity nickel, the stuff used in EV batteries. We believe the potential for a prolonged period of conflict between the West and the East means the prices of commodities with high exposure to Russia will be volatile. Despite our relatively soft near-term outlook, we have a positive long-term outlook for nickel, and this chart explains the reason. We believe EVs will be the biggest long-term demand driver for nickel. Nickel and cobalt are used as the cathode in a lithium-ion battery, which is the positive side. Graphite is used as the anode, which is the negative side, and lithium is the electrolyte, the medium that connects the positive and negative sides. Now, there are a number of battery types out there, and battery technologies are rapidly changing almost daily. Currently, the most commonly used types are the NMC and NCA batteries, which use nickel and cobalt, and the LFP battery, which is mostly used in China. LFP does not use nickel or cobalt. However, they are heavier and have less range. We believe NMC and NCA batteries should dominate the EV market in the long term, and demand for nickel should rise as a result. An EV uses about 30 kilograms of nickel. EV sales are expected to increase from 6 million per year currently to 30 million per year by the end of this decade. This means that nickel demand could increase at least 60% over the next 10 years. In order for supply to catch up to demand, we believe prices have to be at least $8 a pound, as most of the large undeveloped nickel projects cannot generate attractive economics if prices fall below $8. To secure long-term stable and secure supply, major and mid-tier miners and battery manufacturers are looking for fundamentally solid juniors in attractive jurisdictions, and more importantly, nickel projects that can supply the battery market. With that, I would like to welcome Mark, the CEO of Tartisan Nickel. Mark, you'll be able to share your screen in a second. Please go ahead when you're ready.
Well, thank you, Sid, for having me on here today and for allowing me to share the Tartisan Nickel Corp story. As you mentioned, Tartisan Nickel Corp is listed on the Canadian Stock Exchange and also on the OTCQX under the symbol TTSRF, a Canadian-based Toronto company. Tartisan hosts the Kenbridge nickel deposit, and we just sort of describe ourselves as a small capex class 1 nickel project. So nickel sulfide, which is what everybody's looking for. 7.5 million tons, grading 0.62% nickel. We're deemed as a high-grade deposit. Located in a jurisdiction, northwestern Ontario, which is highly suitable. Very different than sort of West Coast or in the Timmins area, with a different type of deposit, mainly a gabbro-style deposit. We're just located off the Trans-Canada Highway, significant land package of roughly 3,700 odd hectares, close to grid power, and near some other projects that are currently in production, including Rainy River. We are part of the First Nations, Treaty Number 3. We do have an agreement in place with them and have excellent First Nations relations, which is key to a lot of exploration projects in terms of permitting and bringing the project to fruition. You can see here on this slide, there's some pretty decent infrastructure already in place. Top right-hand side, you can see an existing camp that sleeps 75 people, and about a kilometer walk up a gently steeping hill here. You'll see where the existing shaft is. You can see some massive sulfides exposed at surface. There is a recently updated report that's come out on Cambridge that describes what the underground resource is like. You can catch a part of that on CDAR, but essentially outlines 100 million odd pounds of nickel sulfide, which is practically used within these car batteries. You can see here the next slide or two, just the drill deposit sections itself. So if you look at surface here, you can see what is here in green, and that's essentially the block modeled out ore body as it currently stands, the existing 622 meter odd shaft that's in place, and the drill holes that were put in the summer of 2021. The purpose of all of this was to essentially test the down dip extension at Cambridge and see whether or not the mineralization continued at depth. And you can see, in fact, that it has. This is the targeted area here, which had a nice conductor flowing through the middle of it. The drill hole sort of pierced through the conductor, and where you see these plates is where we came into mineralization and semi-massive and some massive sulfides. You can see some higher grades here, 3.18% over a meter and change. You can see 0.82% nickel over almost 3 meters. And a little bit more towards surface, you've got some excellent results of 1.13% nickel over 25 odd meters. So to get into the PEA a little bit, we had the preliminary results out on July the 12th, notably put out in the press release again on CDAR. But what we're envisioning here is an underground mine at Cambridge. So if you want to look here on the right side, there's a bit of a mine plan that's been put in place. 35, 40, almost 40 kilometers of vertical and lateral tunnels and shafts. You can see here the green line signifying this existing 622 meter shaft. And what we envision here is in blocks, sort of if you looked at this as like a Lego set going down sort of 1, 2, 3, 4 down to the base here, you would literally just start at the top and mine your way down to the bottom. And once down at the bottom, there's a series of ramps that you can go and continue to take out material at depth, bring it up to a crushing station, and then haul it to the surface. Originally, we've been able to map out about a 9-year production life, and that's without any further drilling at site. You can see some of the basic financials here that sort of show us with initial CapEx of roughly $134 million, and that's to put this into production. You've got some pretty compelling rates of return after a 5% discount rate. You've got about a 20% IRR after tax. You've got roughly $837 million worth of revenue, and again, a 9-year project life, currently utilizing a 1,500 ton per day circuit. And this all using sort of current metal prices. And we touched on there earlier on in the show here that basically nickel's at $10, and these are the economics that are at play here now. You can see that Kenbridge is highly sensitive to the nickel price. So again, when we looked at the $10 nickel price, you've got an IRR of roughly 20%. You pay back your investment in roughly 3.5 years, and you've got some pretty compelling cash flow analysis. So as you go higher in the nickel price, $12, you can see how the IRR really starts to jump, the internal rate of return jump on this project, where it goes up from 20% to 28%, and you're paying back in 3 years. And if you go to $15 nickel for the more bullish in the crowd, you can see how the IRR really kicks to 40% in the payback period in 2.4 years. So pretty compelling economics. We've gone leaps and bounds here in attempting to de-risk this project, make it as turnkey as possible. And we'll get into a few more of those next steps here. But this slide here in particular sort of shows that the project in the whole, this is some airborne geophysics. And again, with the camp being here and the main ore deposit being here, you can see to the north that we put in some grids over what we think are some pretty interesting geophysical signatures. We have done some geophysics here. We've done some line cutting, and we're looking to come and drill what we think are other carrots in the patch here later on in 2022 and winter of 2023. So more than just one single deposit, we're thinking that there's several deposits on site, which in fact help obviously increase the mine life and provide further throughput for the concentrates. Just a brief budget going forward for the balance of 2022, roughly $7 million odd, and there's a healthy contingency in there of $1 million. But the majority of the money going to the all-season access road that's being put in right now. So we'll be able to access Kenbridge all year long. We'll be able to get a fuel truck in and out, be able to bring heavier equipment into site. And we want to get into a 8,000 plus meter drilling program later on this year to help increase the resource, potentially bringing some inferred into the indicated category as we go into sort of the pre-feasibility study mode, and testing the mineralization at depth, see whether or not it extends at depth. And right now it's wide open, and we fully believe that it does extend. So just the next steps, as we can summarize here, just get into extensional and exploratory drilling, continue with the baseline environmental studies, water flow terrestrial studies, all the geotechnical things, continue to upgrade this all-season road access, continue to evaluate those other targets that we talked about at Kenbridge North, continue on with the local community outreach, getting into pre-feasibility study, and then get into some of these other TDM studies where we're getting to do some more of these looping studies on the north to try and further identify where we want to place the drill. And last but not least, just a little bit of CapEx information. We're roughly around 28 cents, 29 cents today, but we've got 109 million shares issued and standing, 120 million shares fully diluted. We do have some cash in the bank and some marketable securities that we can draw on in between financings. And we've got a tax loss carry forward that was inherited as a result of our purchasing of the Kenbridge, which obviously will help when we get into cash flow territory with the startup. So we're thinking that we're going to be into pre-feasibility as we get into the balance of 2022. We're certainly ticking a lot of the boxes that would be requirements. And we feel that if we can keep pushing this along, that we could be part of this supply chain in Ontario, certainly in the next 4 years. So I think we're sort of a notable project with low CapEx, high grade potential. Again, with an underground mine, there's no strip ratio. We don't have an issue with tailings. We're permitting our way along as we speak, and looking forward to really trying to unlock the value in our project and try to spread the word to new shareholders and existing shareholders that we're bringing this to fruition this decade. And with that, I'll pass it back to you.
Thank you so much, Mark. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in, or you can click on the raise hand option and I can unmute you. In the meantime, Mark, if I may, I'm going to steal the screen from you for a second. I want to talk about a couple of things that came out, that stood out in our study, in our research report. For the audience, if you have not seen our report on Tartisan, we've done a bunch of reports. Our latest report came after the PEA was published. Please check out our platform, researchfrc.com, and you can access all of our reports for free. But while we collect questions, I want to show you all a table we produced that compares Tartisan and other nickel juniors. Tartisan is on the extreme right here. Its project Cambridge has smaller tonnage, as Mark mentioned, but significantly higher grades than most comparables. Cambridge also has relatively low OPEX and CAPEX. Its direct comparable, we believe, is Talon Metals Tamarack project, which is more advanced stage, but the features are directly comparable. TN or Tartisan is trading at just 20% of after-tax NPV at 5%, while Talon is trading at over 50% of their after-tax numbers. Tartisan is also trading significantly lower than that of Talon's EV to resource, implying that we believe that the market is yet to understand or recognize Tartisan's potential. Okay, I've got a bunch of questions. Let's see first. Is there historical data that is directing you to target for the 8,000 meter program, or is it from your work on site? Mark?
It's a bit of both. There's certainly we did borehole geophysics last year. So when those drill holes were completed, we did put the probe down. It has lit up a couple of very interesting geophysical signatures, and that's helping us to follow along trend at depth. Certainly, all of those tools help us to better target the drill. So historically, this was drilled off in the 1950s, 60s, and then again by Canadian Aero, the early part of 2008 to 2011, 12. And we're kind of following up to their drilling. So all of these tools have sort of allowed us to better target the drill. So it kind of a bit of both. I mean, historically, the deepest hole before we arrived was 823 meters, and now we're down past 1,100 meters, and we'd like to continue drilling deeper.
Okay. I want to know, I was trying to, if I may pick your brain a little bit, Mark, I want to know what's the current landscape of nickel juniors out there? Yourself and other juniors, what are you guys seeing these days? Are you trying to collaborate, or where do you see changes in the sector in the coming months or years?
Yeah, well, I mean, I think there's going to end up being some M&A activity. I think there's going to be room here for some strategic investors to come in and try and align themselves with some companies here. Certainly, the last 90 days with what's transpired with Russia and with the inflationary environment and the sort of a downturn risk-off environments created a bunch of opportunities. And I think myself that there's a lot of the larger companies that are late to the table here, and meaning that they don't have a lot of projects in the pipeline that are advanced, like a Tartisan, for example. So I think we're kind of ripe for the picking and for folks to come in and strategically invest at a very minimum.
So are you planning to develop the project yourself or bring in a partner?
Well, I think as it stands now, we're fully prepared to continue along on our own. Certainly, as we get through the pre-feasibility and the feasibility studies, we have everyone in-house that is able to help shepherd us along there. And I guess we'll just see as everything unfolds and as we develop towards closer production scenario, if in fact what opportunities present themselves. I know we have been approached by more than one company that was anxious to see some of the PEA results and would like to sort of have further, more in-depth discussions about structured finance and alike. So we'll just, sort of taking it one day at a time, but, knowing that we are bringing everything to fruition in terms of the whole permitting process and bringing the project to the next level.
Got it. I know you can't share names, but the parties interested in talking to you, are they mostly miners, battery manufacturers, or just financing partners?
Well, definitely battery manufacturers, and there are a number of nickel funds out there now that are looking for strategic investment. So we're definitely having conversations along all lines, all strategic lines, to just try and unlock the best value for the shareholders, frankly. So.
Okay. Now, when we look at the nickel market in terms of development plays, the two types of projects we think. One is those huge, massive projects, but significantly low grade, and the second category is the one you fall in, which is smaller tonnage but extremely high grades. When you talk to these partners or potential partners of yours, what are they seeking these days?
Well, I think they're looking for something that's actually going to get to the finish line and is economic in today's world. So that kind of eliminates a bunch of people. I think with our type of deposit, the Scarborough style deposit, while it's smaller in nature, it is something that can be brought to production in the near term, and near term meaning 4 years or less. Just by virtue where we are in the permitting process and the quality of the asset is going to allow for something to happen more expeditiously on our type of project.
Okay. Now we talked about your high grades. Tonnage is definitely lower than, say, a lot of other projects. Do you think that might be a challenge, at least in the next year, before you attract a partner? Do you think the market's waiting for you to expand your resource before they make a move? What do you think are the prospects of attracting someone, next year or two?
Yeah, well, I think the prospects are certainly there. I think, the threat of global recession, downturns in China, it's kind of pushed us into a little more of a risk-off sentiment in our space. But having said that, sort of sticking to our knitting here and having substantially lesser costs to develop this, the payback is in less dilution, and for us having more maneuverability. Certainly on a 1,500 ton per day situation here, as the nickel prices go higher or go lower, it allows you to either dial up or dial back the production. And I think that is of some interest to people out there that aren't looking to have a $2 billion capex situation. It is, once their 134 million is raised in the Tartisan world, we're good to play here and be in the game. Well, minimally for obviously the next 9 years as outlined by the PEA, but I think for significantly longer as we expand the resource.
Okay. How much cash do you have now, and how long will it take you? Maybe do you want to talk about your investments you have too, so that so the audience can appreciate how much you can tap in? Because in our models, we don't see you having to raise any money in the near term.
Yeah, well, we do have about 5 million, 5.5 million today, I guess, in marketable securities, and some of that being in cash. And certainly, with the marketable securities, it allows us to avoid dilution in down markets. So, there are timing aspects to all of this, but certainly it allows us to continue along with our studies and our road work and get to the pre-feasibility stage.
Yeah. Got it. One of the key things that we look for in our due diligence for all companies, especially juniors, is management skin in the game. One of the things we liked with Tartisan is that you yourself own close to 20% of equity. Is that still correct? And are there other significant investors holding shares?
Yeah, that's definitely correct. I mean, we have been picking away on these little down dips. Yeah, the Tartisan sort of family of shareholders is exactly that. I mean, these are folks that have been, some of them in the game since the very beginning. And certainly people that have added to their positions as they see this evolution in the nickel space. We can wrap our hands around pretty quickly 60% of the shares with on 10 fingers. It's fairly tightly held, and continues. We continue to see some folks that are near and dear to the company adding to their positions, and certainly some that are looking to dramatically expand their positions. I think it's just literally a matter of timing at this point.
Okay.
Yes.
Sounds good. I have a follow-up question. I think you already answered it, but maybe you can add more color if you wish. Can your materials be used for EV batteries?
Yes, well, absolutely. It's nickel sulfide, and is the nickel that they're looking for in car batteries. I mean, they have done all the metallurgy through Xstrata. We do have an offtake agreement with Glencore that's already in place at commercial terms. So the Glencores of the world are sort of somewhat satisfied that we've got what's right for their smelter, and certainly would be wanting to continue to look at us as potential feedstock. So yeah, no, we are, we have the right nickel for these times, and the battery world and the golden horseshoe in Ontario here.
Okay. Finally, you did mention upcoming catalysts, but next few months, 2 or 3 months, what can the market expect from yourself and Tartisan?
Yeah, I think the big ones really are getting into the whole permitting and the pre-feasibility study. I think really with the road being finished post-Labor Day, that's going to allow us certainly to turn the chapter here from, us being able to readily and easily bringing things into the camp, heavy equipment, larger trucks. The baseline study is continuing along, and that's all part of the permitting process. And then, we hope to get into a drill program sort of as we head into Labor Day here. And that's to expand the resource and to bring some inferred, hopefully into indicated category to help firm up the resource.
Fantastic. Always a pleasure chatting with you, Mark. I don't see any more questions. Thank you so much for taking time today, and everyone on the call. A recording will be uploaded on a YouTube channel shortly. Please ensure you subscribe to our channel and also sign up to a member of our platform, researchfrc.com. You'll get alerts when we publish new reports. And of course, you'll be able to see our list of top picks. Mark, any final comments, thoughts?
No, I just think please come and visit our website, tartisannickel.com. And certainly if you have any questions or anything to follow up, I'm very reachable. The email address and the phone number is on the website, and certainly on the bottom of all the news releases. So happy to have some one-on-ones or whatever, to follow up on any future questions.
Thanks again. Thank you, everyone, and wish you all the best and stay safe.
Thank you.